So basically, what we are going to be talking, or rather what I'll be teaching you guys today, is entry criteria, what I look into before taking any trade. All right, I hope you all can see my chart clearly. What I look into before taking any trade. I'm on a 4-hour time frame. Because of time, I won't be going into lower time frame, but I will try ensure that I adequately break down most of the pay. All right, so I will be starting here. All right, I will be taking my entries from here. I'll be starting from this place. All right, so this is where I'll be taking the seminar for, and we'll be going this way. So basically, what I look out for as my entry criteria is, let me assume the market is trending. All right, entry criteria on trending trade, which is basically trend line bounce, is what I'm talking about. Let me assume the market is going in this way. All right, so I will be interested on the third touch of this trade. Here happens to be the first touch. Here happens to be the second touch. So I will be interested on wherever the market gives me a third touch here, and not just where the market gives me a third touch. There are some things I look into when the market gives me a third touch. So basically, whenever I send out a chart markup on my Telegram community, what I do is immediately the market gives me a third touch, I send it out. That's why I always tell you guys, do not use it as a signal, because most of the times if I send it out, it doesn't mean that I'm already in the trade. It is here to give me my entry criteria until I get my entry confirmations before taking the trade. So what are the entry confirmations I look into? Number one is chart patterns. Number two is candlesticks formation. All right. Then number three happens to be the high or the low. I will explain all of those things now. So what do I mean by chart pattern? If the market has already given me first touch here, second touch here, and I'm waiting for it patiently to come to the third touch, then what I'll be waiting is for the market. Let me admit in more people. More people are joining. Let me admit them all. So I will be waiting for the market to start giving me something like this. All right, something of this nature. Here, please, if you are joining, kindly mute off your mic. Kindly mute off your mic. Thank you. Turn off your mic if you are joining. Yes, after the seminar, definitely there will be questions. I will take all your questions. So what am I trying to do? I'll wait for the market to start giving me what we call descending pattern, descending formation, or ascending pattern. If it's in an uptrend, then I will be looking for descending. If it's in a downtrend, I'll be looking for what? Ascending. So happens to be that this particular one is an uptrend, and I'm looking for what? Buy, which happens to be on my top touch. So I will wait for the market to basically break this trend line. After this intro, I'm going to go technically in the charts and show you what I mean in real-time charts. There is a video I'm actually making. That video is trend line bounce strategy. I'm done with the video, but I needed to do this webinar because on that video, I did not touch entry. I did not touch entry. So, but this one is specifically on entry. So after this one, I'll post this video. Ensure you watch it so that you understand what I mean by trend line bounce strategy. This is basically only entries, right? So I'll wait for this trend line to get broken. If that trend line gets broken, let me use REM. If this trend line gets, this happens to be my trend line, all right? So if this trend line gets broken, now I will wait for a retracement here. So where I'm going to take my trade will be on that retracement, all right? Basically here, I'll be interested in taking my trade here with stop loss somewhere here. So there's just a kind of scenario on what you should be expecting, All right, so having that said, let's dive into the technical aspect of everything, and let me break it down and show you what I mean. I don't want this webinar to be too lengthy because I'll be taking some of your questions. So basically, I said I'll be starting from this red button. So if I am here, when this market was here in real-time formation, what I'll be interested in, since I've already seen, let me admit in more people are joining. Okay. That's good. All right. Since I've seen what first touch here, second touch here, basically you need two higher high or two higher lows, lower high to determine a trend. All right. I've seen this move and this push here. So that is telling me already that the market is trying to form a trend. So what I will do is to pick my trend line. If I pick my trend line, you draw it at the week. At the week, don't make that mistake of drawing your trend at the body. If you draw it at the body, if you go to a different time frame, which happens to be the lower time frame, you might think it's a breakout, while it's just a retracement. So I'm sure you all saw how I did draw my trend line. All right. So here happens to be my what? First touch. Here happens to be my first touch. Here happens to be my second touch. Here happens to be my second touch of this trend line. So I will be interested when the market gets to my third touch, which happens to be here. And that's why I always tell you all that patience is the key in Forex. It now takes a patient trader to wait for all these moves to actually occur and for the market to get to E zone before thinking of taking this trade. It actually takes a whole lot of patience. If you are not patient enough, you might start taking trades that do not meet your strategy. And that's why you should have that at the back of your mind, that you shouldn't trade every day. Every day is not for trading. Sometimes in a week, 2 weeks, you might not have taken trade. So now the market is now in our zone. What are we looking out for? Remember what I said in the introductory part? We are going to start looking out for our confirmations, which happens to be what? Our chart patterns, all right? So the first chart pattern I'll be looking out for is descending trend line, descending pattern, right? So which, if you look typically, you will understand that this market happens to be what? Descending this way, right? Like I said, I can't go down to the lower time frame because of some network issues, and I also don't want this video to be too lengthy. If I start switching on the lower time frame, then it might take us a very long time before we end this webinar. So if you go down to your lower time frame, you will see this clearly. It will be much more clearer. All right, but this is on a 4-hour time frame. And since this happens to be in our 4-hour time frame, as you can see, looking down clearly within this area, that is my concentration within this area now, you will discover what's going on. This trend line here has been broken. This trend line here has been broken actually, all right, and retesting. Now, you can enter this trade two ways, aggressively or conservatively. I'm sure you already seen, had it been this happened to be a live trade, I would have taken a loss here. I would have obviously taken this trade and I would have taken a loss. That's why, that's to show you, or nobody on this earth, no matter the kind of trader you are, even if you are the best trader in the world, definitely from time to time you will take a loss. But what really matters is whether your strategy is winning. If the number of loss is lower than your number of win, that is what makes you profitable, not that you do not take a loss. So this trade you are seeing here basically met up my entry criteria. It has already given me what? A bullish candle. Let me zoom in clearly and show you what we call bullish engulfing candle. All right, it's also one of the things we use for our entry criteria. Let me admit more people. More people are joining. All right, so if you look at this, our red zone, we will discover that this is a bullish candlestick. This one now is a bullish candlestick, and it's actually engulfed this first one. All right, this is a bullish engulfing candle, and is what we use as our entry criteria. So basically, I would have taken this trade and I would have obviously taken a loss. So how the trade would have gone is this way. I would have immediately taken this trade from here, all right, stop loss somewhere here, and of course my take profit will definitely have to be here or here, all right, which is 1 to 2 risk to reward. Sorry. So I would have taken a loss on this particular trade, all right, which happens to be you as a patient trader will determine whether you're going to revenge trade or not. So from here, let me admit more people. So from here, do not forget, after your trade hits your stop loss, what are you going to do? After a trend line gets invalidated, you extend the trend line to the current price. All right. So this thing which happens here, as you can see, immediately the trade hits our stop loss. What did it do? It immediately reversed and start going in our favor. And this is where most of you start panicking. The trade hit my stop loss and went in my favor. So after this, we do what? We adjust this trend line, current price, right? If we adjust it to the current price, what is now going to happen? Here, of course, will now be our, let me delete this. Here will be our first touch. You maintain the first touch. You do not shift it first touch. The first touch is what gives the momentum for the rise of the price. So here happens to be our first price, and here happens to be our third touch. If here happens to be our third touch, then we will of course be interested on the third touch. Not just I'll be interested in the third touch, but remember you mark up your zone, which happens to be your support at this point in time. It happens to be right. Why are you marking out? This to help you in not to take the trade that is falsely breaking. What do I mean by that? I mean false breakout, right? This is where most of you will start thinking that this trend line has been broken, and because trend line has been broken, then you go and use trend line break strategy, and it immediately hits your stop loss, right? So if you are a trend line break trader, for example, you are going to do what? Let me assume you are a trend line break trader. You are going to think that this thing that is occurring here, this thing that actually occurred here is a break and retest. Then you want to take a sell here, right? Thinking that this trend line has been broken. Immediately you place that sell, what is going to happen? The market will immediately go against you. So the next video I said I'll be posting after this one, ensure you watch it because it's thoughts. I went into detail to explain trend line strategy, right? But what we are discussing here is just entry criteria. So now the trade is in our zone. What are we going to do? First of all, present our chart pattern. First of all, mark up our chart pattern. This happens to be here, right? This, right? Wait. This is what I'll be expecting. So I'll be expecting two things. I will either take this trade aggressively or conservatively. For me to take aggressively or that's what I usually do. Right? So I don't know. Somebody just joined and okay. So like I always say, when I do send out the markup chart, immediately the markets touch this trend line on our fourth touch, which will definitely happens to be here. I will send it as a markup chart. Why I'm doing that is to bring your attention that this particular trade is in our zone and you should look critically and know if you are going to see any entry criteria for you to take the trade. I'm not sending it out for you to take the trade. Sometimes the market might get to your zone and your entry criteria will not occur. So that basically means you won't be taking the trade. All right. So why am I going to take this trade now? So I'll still look into critically. I can be able to discover what's here, some sort of descending triangular pattern. All right. If you go to a lower time frame, it will be more clear. So you scale it from a higher time frame down to a lower time frame in order to picture out entry. Remember the two things I told you. The descending pattern has been broken, which you can clearly see here. All right. Remember, the market is now, so we are looking for a way we are going to enter the trade. All right. So first thing here is what is in our trend line and also on our support. As you can see on this zone, trend line and also on our support here. All right. This is our trend line. This is support. So this is our triangular descending pattern, which has been broken. So what are we waiting for? A kind of bullish candlestick pattern. And where did you get the bullish candlestick pattern? We actually got it here, as you can see from here. These three things, these three candles, I can't actually recall the name, but this three candle is a confirmation candle. If you do not know your candlesticks, ensure you go and read it. If you've not read the book Candlestick Bible, ensure you read it. Every trader definitely will read that book because it broke a whole lot about candlesticks pattern. So candlesticks is what we use for entry criteria aside chart pattern. All right. So I got this confirmation here, which is a sign of what? A sign of reversal. This tree is a sign of reversal. So what will I do? I will immediately take my trade here. I will take my trade here. My stop loss. Let me show you here my stop loss will be. My stop loss will definitely be below this zone. If you go to my Telegram channel now and check some of the trades that I do send, you discover that my stop loss is usually below a red zone. That red zone is here, and that's how I put it. Why do I put it there? Because this is a place that market is unlikely to get to. If this zone gets broken, that means that the market might keep selling. All right, that means our strategy is not going to hold at that point in time. But if the market doesn't get to that place, that means our strategy is definitely going to work. So this is where I place my my stop loss and what my take profit. Of course, if you look at my charts, you definitely see that I always mark two red zone. All right, two red zone, which happens to be the the high and the low. All right, so this low one happens to be my my support, and the up one happens to be my resistance. That's where you put your take profit. Do not make that mistake of going crazy in lots. All right. So as you can see, this 1 to 3 risk to reward. I do not always allow my take profit to get exactly at the resistance zone because of some kind of reversal. Market might just get very close to it and return. So that's why I like putting it a little below it. All right. As you can see, this happens to be 1:3. We took a loss here. This was the first one we took. We took a loss here and we lost 1%. But here we made a win and we did what? And we won 1:3, which basically means we are now up by 2%. We've recovered our profit and we are now up by 2%. Do you see how these things work? It doesn't mean I'm not going to take a loss, but just keep following your strategy. Just keep following your strategy. So only this win alone means that even if we take 2 more loss, we are still profitable. Right? So that's basically what you think you take. So after this particular trade now, what do you do again? You extend your trend line to the recent price. So our recent price happens to be here. Our recent price happens to be here, and that will make our trade. That will make our trade to be here. Remember what I told you. You keep maintaining the first touch. That first touch is what gives you what gives you rights of movement. All right, let me know. Okay, so this happens to be what our first touch here. Then here's our second touch. Our second touch is going to be here. All right, and our third touch obviously is going to be here. So here is where we pay attention, which happens to be the third touch. So most of the times, it might take a long time for the market to get your trend line. So what you do is to use TradingView alerts. Once the market hits that trend line, it will alert you. Then with that, you won't be looking at your chart all the time. So now that the market is our zone, what are we looking out for? We are definitely looking for what? A descending pattern. A descending pattern. All right, so we are already getting a descending pattern, but before a descending pattern, though, we mark up our zone. All right, we mark up our zone. So our resistance zone happens to be here. Sorry, let me mark that up. Our resistance zone happens to be here. All right, that happens to be our resistance zone, which is that red zone you always see me draw, which is now second confirmation that we are going to buy a trend line first and a support 2. So now what are we looking for? We are now start looking into chart patterns and candlesticks formation. So from here, we'll be able to picture this descending triangular trade here, this descending triangular pattern here. All right, so if you zoom in clearly on a lower time frame, I'm sure you are obviously going to do what? You are obviously going to discover some sort of another retracement here, which will definitely do what? Give you an entry within here. It will give you an entry, making us to do what? To take this trade here. As you can see, we also had a candlestick formation, a bearish candle and a bullish candle engulfing the first one. That's a sign of reversal. So we're obviously going to take this trade here. If you take this trade here, our stop loss will just be beneath the red zone. If it's beneath the red zone, all right, do not forget our first take profit is always above here. This is definitely where our first take profit. We'll be looking at taking our first take profit, and then our last take profit we're definitely going to be here, which is if this zone gets broken, then we get to the next level. So this is what we will be sending out for at this point in time. All right, so as you can see, the market actually put us in profits. It puts us in profit. This is it puts us in profit of about 1:9 risk to reward, which is up to 2. Is up to 2. Yeah, this is on a profit of up to 2 risk to reward. So you'll be on break even. So hopefully you would have made maybe 1-to-1 risk to reward win, because you would have broken even your trade somewhere here. You would have definitely broken even your trade, let's say somewhere here, and on this retracement, the market will knock you off. So with that, you are up again, what, 1%. So you did not take a loss here, right? You did not take a loss here. This one actually hit our break even. So guys, that's another thing. Do not be afraid of breaking even your trade. Once you are in profit and it gives you a structure, then you break even. All right. So as you can see, we won that trade now. So from here again, I will be ending the seminar. So I just want to use 3 scenarios and give you all examples so that you understand basically what we mean by that. So from here, this market started doing what? Started selling. At this point in time, I've noticed that this trend line is no longer holding. This trend line is no longer holding, because even if I extend it, of course, it has been broken. It has gotten broken. So I will immediately start looking for what? Start looking for a sell. So I will first thing then zoom out of my trade. All right. If I zoom out of my trade, I will discover that I've seen what? A first touch here now, a second touch here now. Sorry. So I will basically want to extend it. I might not be needing it now, but I will still extend it just in case the market gets to this zone. All right. So I will now zoom in clearly again to know if I will see any trending move. All right. So if I zoom in again, I'm obviously going to do what? Picture here. Here happens to be the first touch. And of course, I will get something like this. All right. I will get something of this nature. Yep. So if I get something of this nature, of course, as you can see, here is already what? Our first touch. Here, sorry, yeah. Here is our first touch, as you can see. Here is what? Here is our second touch. All right, and here happens to be what? Here happens to be our fourth touch. So now that here is our, here happens to be our third touch. First touch over the second touch and third touch. So what do? We zoom in clearly. This is another good trade that most of the times I always like taking it. I always like taking it, because if you look in clearly, we all discover that this trend line has been broken. And for this trend line to be broken, that means structure has been broken. Trend line becomes valid if structure is broken, and structure is broken if either the last high or the last low gets broken. So This last high has this last low, which happens to be the what support, has been broken, and this trend line also has been broken. So that makes this trend line break and a valid. So at this point in time, we are now looking for what? A sell. That's why I was able to picture it a descending trend line from here, where here happens to be what? Our first touch. Here happens to be our first touch. Here happens to be our second touch. And obviously, here happens to be our fourth touch. This trend line, which happens to be the support, has been broken and now is a kind of retesting it. So we are now looking for what? Our entry criteria there. If we start looking for entry criteria, we zoom into a lower time frame. Believe you me, if you go into a lower time frame, this is a 4-hour time frame. So if you go into like a 15 minutes or 1-hour time frame, we're able to discover a structure here, which happens to be what? An ascending pattern, which is what I always tell you guys. An ascending triangular pattern is going to maybe look something like this, of this nature. All right. And that's where we all are going to be interested in taking our trade. All right. So most people might be very aggressive. This is a 4-hour time frame. Most of the times I take my entry on what? On a lower time frame, which happens to be 4 hours. So when I do send out my chart markup, once the market gets to somewhere here, within this area, once market is within this area, I will send it out as a chart markup just to tell you all that the market is getting closer to a zone. Then you should analyze your trade, use your entry criteria, and hop into the trade. But I've discovered that once I send it out, some of you immediately jump into the trade. No, even me, that time I'm sending it out, I'm not yet in the trade. That's why I'm making this video, so that you all will understand the entry criteria I use in taking trade. So that it's not that I send out a chart markup means that I'm already in the trade. I'm just trying to allow you all pay more attention on this trade. I do not send signals. Signals always come with stop loss, take profit, entry. I do not do that. Right? So it's just a chart markup. So now that the market is here, what am I looking for? If I go to my lower time frame, which definitely happens to be maybe a 1 hour, a 15 minutes time frame, I'm sure that within this candle that are formed, within this candle, I'm obviously going to picture out maybe a bearish engulfing or tweezer or understand that might actually give me an accurate entry. So I will definitely be doing what? I'll definitely be taking my trade somewhere within here, all right, somewhere within there. Then my stop loss, of course, you already know, is always above a red zone, and that red zone would have been somewhere here, all right, which happens to be my stop loss would have been somewhere here. And of course, my red zone stop loss happens to be somewhere here. Then, of course, my take profits, if you zoom in clearly, of course, my take profits would have definitely been here, right, on this exact zone, which happens to be what? The last low that was created before the market actually rallied up. This basically was, so this trade would have given us 1:2 risk to reward. I mean, same. It would have given us 1:2 risk to reward, which means whatever we risk, we are up double. And remember, since we started analyzing trade, we only lost once. The first loss was here. This was the first loss that we took. This was the first, sorry, not this. This was the first loss. Let me show you all for those of you that were joining. All right, this was the first loss. Here we lost, here we won 1:3. We became up 3%. Here again we won, but it hit our break even at 1%. So from there we are winning here again. All right, we are winning here again. So basically we've taken like 3 trades and we only took 1 loss. So that's to show you all that nobody on this earth who trades, who doesn't take loss. What matters is your reaction when you're on loss and your reaction when you are on win. Sometimes you might deposit and your first trade happens to be a loss and you start panicking, and that's what differentiates you from a trader and a newcomer. So from here again, we discover what? That this trend line keeps on ascending. Remember, we adjust it to the recent high. If I adjust it to the recent high, which happens to be here, what is going to happen? Here, of course, let me zoom out a little. Here, of course, happens to be our first touch. Here, second touch, and of course, our fourth touch would have been somewhere here. We are not going to take this trade, but we would have been interested thinking that the trade might get up to here. Had it been the market, actually, let me zoom in and show you all what I mean. Had it been the market actually got up to this area, would have been interested in taking it within somewhere here, then take a sell. But it did not get here, so we did not take that trade. And that's where your patience as a trader comes in. Most of you, once you start seeing this running down, you start doing what you want to capture the trade here. So therefore, trying to chase the trade. Do not chase the trade. The trade will definitely come to you. All right. So we keep waiting for the market to get to this trend again. As you can see, the market finally gets to our zone. Our zone happens to be here. But we are not going to take this trade. And if you start looking at it, you definitely know that we are not going to do what? We are definitely not going to sell because there is no entry criteria here. There is no entry criteria. If you draw this trend line, you are not going to discover any ascending pattern. Remember what I do tell you, that once if the market is basically coming like this, all right, not this. If the market, just for the sake of those that are joining, if the market is, let me assume, in a trend line, in a downward trend, gets up like this, something like this, something like this. All right, where here happens to be what? Here happens to be our first touch, second touch. We want the market to start doing something like this. We want the market to start doing something like this. All right, so I'll be able to identify an ascending pattern here. Then on the break, on the retest, we do what? We sell. We sell somewhere here. So that's basically what we are looking at. And that's what we have been using all this while. That's why we have been using all this while. But if you look at this, the market gets to our zone, and what did it do? It starts to consolidate. This is what we call accumulation. Accumulation is a sign of reversal. So once you display accumulation, when the market is just moving up within a zone, just going up within a zone. So how I do it, I immediately clone it. I will clone it. I also have my accumulation strategy. I think I've made a video on that. So if you have not watched it, maybe do well and watch it. So let me reduce the visibility of this now here. I don't know, but this is basically what you should do. I want to reduce the color so that it will be more bright. That's it here. Right. So yeah, that's it here. So this is what I will do immediately I start seeing this accumulation phase. This accumulation phase is already telling me that the market wants to reverse. As you can see, it gets to our zone, no entry criteria, no descending. The market is just consolidating, going up, coming down, going up. This is on a 4-hour time frame, but if you go down to a 1 hour or 15 minutes time frame, you will discover that all this thing is actually took a very long time. All right, this is in a 4-hour time frame. Like I said, if you go to 15 minutes, we all discover that within this bus, we a very long consolidation. So we only trend line traders here. So we do not trade ranging markets. So there is a strategy for accumulation and distribution trade. I'm not going to go into it today, but it's on my channel. You can go there and watch it to be able to know how to identify all those things. So from here, as you can see, there is no trade taken there. What are we going to do? We start waiting again for a new trend. Basically, we were able to discover that here happens to be what? Another upward move, first touch, and we were able to discover what? A second touch here. All right, sorry, we were able to discover first touch, a second touch here. We are not going to use the touch within this box. Why? Because most of you will start to ask, why are we not using this one as our second touch? Why we are not using it is basically because this is still within the accumulation phase. So that's why we are not using it. We are using the recent one, which happens to be this. Someone is saying no sound coming. Can you hear me? If you can hear me, drop a comment. If you have been hearing me all this while, comment on the chat section. All right, someone can hear us. So we continue. So from here, we discover what? That the market has already gotten to what? Here happens to be first touch. Of course, sorry. Here happens to be first touch. Here happens to be what? Here happens to be second touch. We'll now be interested on what? On the third touch, which happens to be here. And if we are used our entry criteria, as you can see, we would have definitely gone on this trade, having our stop loss within here, and then having our take profits within here. All right, which happens to be the last zone that the market got into. And this also smashed our take profit. And that's basically how our entry criteria works. If we keep going down, you will discover that that's how the market keep repeating itself. Markets keep on repeating itself all the time. It keeps on repeating itself. So that basically all for this webinar. Like I didn't want it to be too lengthy, and I think we have spent more than 45 minutes on this seminar. So that will be all for this webinar. Thank you for joining, and I will see you all on the next webinar. This video is recorded in case you missed it, so do well to watch it. That's all for this webinar. Thanks for joining.